Hello, and welcome to another stock analysis on Stock Market Palantir. Don't forget to subscribe and drop your comments. Now, let's go hear our analysts.
Welcome to the Stock Market Palantir. Today, we are going to talk about DBRG.
Digital Bridge Group, Inc. Yeah, this one has suddenly become a perfect storm of global macro trends. It's sitting right at this chaotic intersection of the massive AI infrastructure build-out and this really intense event-driven M&A speculation, specifically with SoftBank.
Absolutely. I mean, the focus on DBRG is just unavoidable after that violent repricing event we saw on Friday, December 5th. This was not your typical trading day. The stock, it closed the day before at 972, opened Friday at 970, and then it just surged. It hit an intraday high of 1484 before settling back a bit to close at 1412.
And that 45% surge in a single day is staggering, sure, but the real signal to me was the volume. We saw 56 million shares trade hands. I mean, to put that into perspective for everyone listening, the 3-month average volume was only about, 4.1 million shares? So that volume anomaly, it just confirms we're looking at some powerful structural forces at work here, all driven by an immediate catalyst.
Right, and this volatility, it sets up our core question perfectly. I'm going to argue that the current valuation, even at $14, is ultimately a rational and frankly necessary repricing. It reflects the deep fundamental strategic scarcity of DBRG's assets, particularly that irreplaceable power capacity needed for AI. The market is finally correcting a long-standing undervaluation.
See, I'm sorry, but I can't buy that the surge was some kind of rational recognition. While I respect the quality of the assets, I really do, the price action and where it's trading now are overwhelmingly driven by a highly binary catalyst, which is the SoftBank take-private rumor, and that move was amplified by some really complex market microstructure. The dark pool activity, the liquidity squeeze. This is a speculation story first and a fundamental story second.
Well, let's start with why the fundamentals are strong enough to justify this kind of attention in the first place. DBRG's management has, I think, successfully completed this multi-year transition away from the legacy complex REIT, Colony Capital, into a pure-play digital infrastructure manager. The price is now reflecting the value of what we're calling the power bank.
The power bank, right. And that is the crucial component here, and it defines the scarcity you're talking about.
Exactly. When we talk about scarcity in the AI era, we aren't talking about empty land or, some generic building. We are talking about power and the permission to use it. DBRG possesses 5.4 gigawatts of data center capacity, either built or under construction. But the truly strategic number, it's the total pre-permitted runway of 20.9 gigawatts. Think about that number, 20.9. In this environment, getting power access, zoning, regulatory approval, it takes years, sometimes a decade. That's time that hyperscalers and major capital allocators just don't have. So this existing pipeline is exceedingly rare.
Now, that value is undeniable, but the timeline suggests the market was completely oblivious to it until a rumor gave it a jolt. I mean, before the SoftBank leak, the market barely reacted to the strategic MOU with KT Corporation in South Korea that was announced back on November 26th. That deal already validated DBRG's technical competence in a huge Asian market. If the value was accelerating, why did the stock just sit there near 970?
Because the market is, historically inefficient at recognizing value until a major buyer validates it. The analyst community, they were already recognizing this shift. They pegged their conservative case valuation at $25 a share. And this floor, it's derived from applying a market multiple, say 25 times, to projected 2026 fee-related earnings, or FRE.
And we should probably clarify FRE for the audience. It's not some fuzzy asset value, right? It's the purest measure of the underlying management business's cash flow. It's those highly predictable fees DBRG earns managing its massive funds, totally independent of volatile asset sales.
Precisely. So that $25 floor suggests a substantial unspeculative intrinsic value. The SoftBank rumor didn't create the value. It just served as the high beta catalyst needed to force the market to price the company correctly.
I just reject that premise that the rumor was just the delivery mechanism. If fundamentals were the primary driver, why didn't the market react to the massive operational improvement? The Q3 earnings significantly beat consensus, coming in at 12 cents versus 1 cent. The market ignored it completely until a wait night appeared backed by rumor. That 30% surge on December 5th was pure panic buying driven by the potential event, not some gradual re-rating of EBITDA multiples.
But that panic buying was directed towards the most fundamentally scarce asset class in the world right now.
I agree that the massive gap between the current price of around $14 and the potential takeover range, which analysts say could go as high as $35, is the real evidence. This huge 60% gap demonstrates that the price is overwhelmingly dominated by the probability and the execution risk of the deal collapsing. If that $35 value was secure, the stock would be much, much closer to it. The driver is risk, and that risk is purely event-driven.
I'll concede that risk is currently the governing variable, but that risk only exists because of the strange market mechanics that let the rumor become so explosive. Let's look at why those mechanics allowed the stock to move 45% in one session.
I think the microstructure evidence is the smoking gun that confirms this was speculation from the start. We have to look at the hidden trading data, what we call the dark pools. There was a major anomaly on November 25th, well before any public rumor. The off-exchange short volume ratio spiked to 40.22%, which is far above the typical 20 to 25% norm.
And how do you interpret that spike?
I interpret it as foreknowledge. That 40% short volume ratio isn't just a technical number. It's a siren telling us that smart money was aggressively accumulating positions. Market makers were hedging massive buy orders placed in these private venues by institutions who had information that the deal was in advanced stages before the public news broke. So this means the move wasn't organic recognition, it was purely anticipatory M&A speculation.
I see why you'd characterize it that way, but I'll offer a different perspective. While yes, information leakage is possible, these sophisticated funds were betting on a catalyst that aligned with a deep, inevitable fundamental value. SoftBank's specific interest in DBRG stems from its public AI imperative, the Stargate project. They need immediate scale. The accumulation wasn't just a bet on a rumor. It was a high-conviction bet on the strategic asset rotation being validated by a major, capital-rich buyer. They bet on a logical endpoint for a fundamentally scarce asset.
That's a very charitable way of saying speculative fever delivered the valuation that the operations alone couldn't. And look, we cannot separate this from the company's tumultuous corporate history. That history created a structural weakness that the rumor was able to exploit.
I fully acknowledge the difficult past. We have to discuss the disastrous 2017 tri-party merger that created Colony North Star and the subsequent necessity of the 2022 1-for-4 reverse stock split. That reverse split, taking the share count from 656 million down to 164 million, was essential corporate hygiene. It was required to psychically reset the stock and burn away the odor of that previous era.
But this complexity created a decade of lingering stigma, creating what the market universally applied as a conglomerate discount. The company was labeled a value trap for years because investors didn't trust the complexity. Without the high beta intervention of Masayoshi Son and the SoftBank rumor, the market would likely just continue to apply that discount, leaving the stock trading near 970, regardless of the operational improvements in Q3. The market needed external intervention, not internal earnings growth.
But that external intervention is precisely the market's definitive rejection of that historical discount. The fact that an entity like SoftBank, eager to get its hands on 20 gigawatts of power, is willing to pay a massive premium, the bull case of 30 to 35 a share, it validates the scarcity argument completely. Building that takes too long. SoftBank needs to deploy capital into AI now. That urgency justifies the premium.
It justifies the theoretical premium, but the price we see today, $14 and change, being so drastically far below that theoretical target of 35, confirms that the single most important variable for investors is not the asset value, but the execution risk of the transaction itself. And that risk is substantial.
Detail the primary risk as you see it. Well, the regulatory hurdle is enormous. The Committee on Foreign Investment in the United States, CFIUS, they view data centers as critical infrastructure and strategic technology. And why? Because foreign ownership could grant access or control over the essential plumbing of the AI economy. So this significantly complicates a foreign acquisition, especially by a SoftBank Vision Fund with known ties to Middle Eastern sovereign capital. The market is pricing in a very distinct possibility of regulatory failure.
So you were describing a classic binary option.
Exactly, and the options market confirms it. Implied volatility for DBRG is spiking at the 99th percentile right now. That means traders are paying massive premiums because they know the next headline, SoftBank officially walking away, or CFI-US signaling approval, will move the stock another 20 to 30% in a single direction. The price movement isn't a reflection of steady fundamental growth. It's a reflection of risk management against a potential disaster or a windfall.
While I fully concede that execution risk is currently the dominant factor governing the day-to-day volatility, and one must be keenly aware of the CFI-US hurdles, it doesn't detract from the overwhelming strategic asset value that drove SoftBank to the table in the first place. That fundamental scarcity, it acts as a floor, preventing the stock from fully collapsing.
The asset value provides the potential, I give you that, but the speculation provides the structure and the volatility. We are currently in a market structure where the valuation is defined by the probability of a deal, not the depth of the assets. And that's a dangerous place to be if the deal fails.
And I still maintain that the asset value provides the long-term structural support that makes this bet worth taking for sophisticated capital.
My focus remains on the near-term risk dynamics.
So it's clear we approach DBRG from two distinct yet equally vital analytical points. From my perspective, DigitalBridge has emerged as a fundamentally critical utility provider for the AI age, defined by its massive, irreplaceable 20.9 gigawatt power pipeline. The SoftBank rumor was just the catalyst to focus market attention on this tremendous advantage, and the focus should remain on that long-term strategic worth.
And I'll reiterate that while those assets are strong, the stock price remains highly susceptible to M&A headlines and market microstructure. We are operating in a highly binary deal or no deal environment. The outcome determines whether investors realize that enormous $25 to $35 premium, or face a sharper tracement back toward that $10 to $12 support level if the talks collapse. A truly successful analysis has to weigh both the fundamental scarcity and these highly volatile special situation dynamics.
A nuanced understanding is absolutely essential for anyone looking at this stock right now.
Absolutely.
Thank you very much for hearing us. Let us know in the comments what is your opinion and if you want us to analyze other stocks. Don't forget to subscribe to the Stock Market Palantir channel to catch up with more stock insights, and see you in the next video.